Hello people, how are you? What's up? I hope you all are doing extremely amazing. People, welcome back to our another lecture of corporate and economic law. So people, we can proudly say that till now we have covered with 3 chapters carrying 10 marks. What are those? Number 1 is SEBI regulations, number 2 is corporate governance, and number 3 is people, insolvency, bankruptcy code. So we can proudly say that if any question is asked in your exam from these 3 chapters, you will be easily, effortlessly, confidently able to write those answers in your exams. Yes or no, people? So, sir, now what? Now, people, we are going to target the big chapter that carries 40 marks in your exam. That carries 40% weightage in your exam. Sir, which is that chapter? We all know, people, the chapter that we are waiting for, and that is Companies Act 2013. Now, this chapter will be coming in your exam for 40 marks. Yes or no, people? So now in the Companies Act, so there are 9 chapters we have to study. Till now we have studied 7 to 8 chapters. For that itself it took lots of time, people. How can we cover these 9 chapters? It's going to take a lot of lectures. No, people, no. Within maximum 5 to 6 lectures we will be thoroughly done with the Companies Act 2013. Yes or no, people? So sir, now what? Which is the first chapter that we are going to start? People, we are not going to start with company formation and conversion. It's very easy. We are going to keep that in our last lecture of Companies Act 2013. Yes or no, people? So right now, people, our target is we are going to start with 2 of the most beautiful practical subchapters under Companies Act 2013, and that is investments and loan. And number 2 is dividends. So our today's lecture target is, people, we are going to be thorough with loans and investment, and number 2 is directors. So without wasting any time, let's get started. Yes. So people, loan and investment by company, very easy chapter, very easy. Okay. Sir, why are you calling it easy? There are so many rules and regulations that we have to study. People, the reason why I am calling it easy is because we have got mind maps. When you learn using mind maps, people, no matter how difficult the provision is, you will be effortlessly able to read, understand, remember the provisions forever. Okay, people? Okay, chalo. So, what are topics that we are going to cover in today's lecture, people? Number 1 is section 185 that talks about loans to directors or any other interested person. Okay. Number 2 is, people, section 186 that talks about loan and investment by a company. Yes or no? And number 3 is, people, section 187 that talks about investment by a company should be held in its own name. We are going to understand the meaning of this. And the last is, people, section 73 to 76A that talks about acceptance of deposits. Again, beautiful concept. Okay, people. After that, we are going to complete off with the dividend subchapter. This is dividend subchapter. Now, in dividend subchapter, there are 5 topics. Number 1 is declaration and payment of dividend, very easy. Number 2 is declaration of dividend out of reserves. What is the limit? We are going to study. And number 3 is, people, we have to deposit dividend amount in a separate bank account. What is the rule for that? We are going to understand, very easy, very short. And then, people, interim dividend and payment. How would the payment of dividend be made to the shareholders? Yes or no, people? So once we are done with this, we will be solving past year's question paper. After that, people, we are going to solve the expected question that will be coming into your exams. Yes or no? And that's it, people. We are done thoroughly with the 2 subchapters, that is investments and loan. And next is payment of dividend. Chalo, people. Chalo. Let's get started. So, section 185. Loan to directors, etc. What is the meaning of etc., people? Etc. means any other interested person of the director. So, number 1 is general prohibition. Number 2 is conditional permission that you can give, but there are certain conditions. Next is exceptions. Under what cases these things will not be covered. And last is penalties. Then exemption to private companies. Very easy. So 5 topics in a section 185 we are going to study, and then we can proudly say that you will be thorough with section 185 in detail. Yes or no, people? So without wasting any time, let's get started with section 185. Sir, what does section 185 says? Section 185 says that a company cannot directly or indirectly. Company what cannot it do directly or indirectly? Company cannot give any loan. Company cannot give it guarantee. Company cannot give security. So number one provision is very, very simple. Company cannot give loan. Company cannot give guarantee. Company cannot give security, either directly or indirectly. To whom, people? To any director of the company or its holding company. If Myntra, whose holding company is Flipkart, if Myntra wants to give a loan to the director of Myntra, can it give? No, they cannot give. They cannot give loan to Myntra's director also. They cannot give loan to Flipkart's director also. Okay. Number two is, people, Myntra cannot give loan to any partner or relative of such a director. So Myntra's director's partner, Myntra's director's relative also, Myntra cannot give loan. And number three is, people, any firm in which such a director or relative is a partner. So I'm not giving loan to director, I'm not giving loan to his partner, I'm not giving loan to its holding company's director, I'm not giving loan to relative of the director. Now I'm giving loan to an entity where such a director or a relative is a partner of that entity. I cannot give loan to that entity also. Very easy, people. Now, why is this rule made? This is to prevent misuse of company's funds for personal benefit. In the end, the money belongs to whom, people? In the end, the money belongs to the shareholders. Yes or no, people? So don't you think you should get shareholders' approval? And that's where a second provision comes into the picture. A company may give loan. A company may give loan. A company may give guarantee. A company may give security to a person in whom director is interested if two conditions are followed. Company can give loan. Company can give guarantee. Company can give security if two conditions are followed. What are those two conditions? Number one is, people, shareholders are themselves giving permission that you give loan. We don't have any problem because this money belongs to us. So we don't have any problem. We can give this money to director. It's allowed. Next principle is very, very important. The loan must be used for the borrower's principal business activity. The loan must be used for the principal business activity. Yes or no, people? Now, person in whom director is interested. What is the meaning of this? Company may give loan, company may give security, company may give guarantee to a person in whom director is interested. What is the meaning of this? Person in whom director is interested includes a private company, a body corporate whose board or management acts as per the directions of the directors or directors. Sir, I didn't understand anything. Don't worry. Person in whom director is interested. What is the meaning of this? A private company can give loan to a private company in which that director is a member or that director is a director itself. So Myntra can give loan to Reliance provided Reliance is a private company. Number one, Reliance director or member is our company's director. So very easy, people. Number two is any body corporate, which means what? Any body corporate, not just private company, where the director controls more than 25% voting power. So, Myntra, there is a director called as A in Myntra. Myntra can give loan to Reliance, where this director A holds 25% voting power. Yes or no, people? Okay, this is the meaning of person in whom director is interested means. And next is any body corporate whose board or management acts as per directions of that director or directors, which means what? That director is not a director in Reliance. My director does not hold more than 25% in Reliance, but the board of directors of Reliance are acting as per the instructions of the director of Myntra. Then also we will call it as person in whom director is interested. Okay. So let's again revise. A company cannot give loan directly or indirectly. A company cannot give loan directly or indirectly. Company cannot give loan. Company cannot give security. Company cannot give guarantee to three people. Number one is any director of the company or the director of the holding company. Number one. Number two is any partner or relative of such a director. Number three is any firm in which such a director or relative is a partner. This is to prevent misuse of company funds. Okay. Now there is a conditional permission. You can give, but there is a condition. What is the condition? A company may give loan. A company may give guarantee. A company may give security to a person in whom director is interested if two conditions are satisfied. Number one is SR must be passed, and number two is the loan must be used for principal business activities. Now, sir, to whom we are giving loan? We are giving loan to a person in whom director is interested. Now, what is the meaning of person in whom director is interested? Means a private company where the director, the private company in which Myntra's director is a director or member of the private company. Number one, any body corporate in which Myntra's director is holding 25% of voting power in Reliance, or any body corporate whose board of directors are accustomed to act as per my instructions, they will be called as person in whom director is interested. Very easy, people. Okay. Next is exceptions where loan can be given. These are the exceptions where these rules that we have studied does not apply. The above restrictions don't apply in 1, 2, 3, 4 cases. Number one is if loan is given to managing or whole term director. Are non-executive directors covered? No. I am giving loan to whom? MD or whole term director. As part of employee service conditions, I am giving loans to all my employees. Among those employees, MD and whole term director are included. I can give. Okay. Number two is under a scheme approved by special resolution, which means for shareholders, I have given permission that you can give loan to them. Yes or no? So company can give loan to MD, company can give loan to whole term director. Under which situation? Number one is a part of service condition to all the employees, and number two is SR has been passed under a scheme. For example, I want my company's director should have expertise in finance, so by passing a special resolution, what I do is I give them money for what purpose? So that they can get CFA degree in their tenure, so that it's again going to be beneficial for my company. Yes or no? Next is people, ordinary course of business. What is the meaning of this? The company's main job is itself giving loan, guarantee and security. Then this is again a part of ordinary business. Then this will not be called as a special business for which it is completely allowed. If the company's main business itself lending or giving guarantees, but the exception is, condition is, interest rate should be more than the government security. That means you cannot give loan at a cheaper interest rate compared to the prevailing government securities. Again, it's going to be an indirect benefit. Yes or no? If you want to give loan, you give. But provided you have to make sure that interest rate is carrying more interest than the government securities. Very easy, people. Now next, if holding company is giving loan guarantee security to its wholly owned subsidiary company, that's also completely allowed. Again, over here, subsidiary company cannot use this money for their personal use. It should be for principal business activity. Yes or no? And last is, if holding company is giving a bank loan, if a holding company is giving guarantee or security for a bank financial institution loan to its subsidiary, it is allowed, provided the loan is for principal business purpose. So holding company can give guarantee, a holding company can give security to a bank saying that if the subsidiary company does not pay, I will pay you. That is allowed, provided the subsidiary company should use the money taken by the financial institution for its principal business activity. Very easy, people. And last is, if there is any contravention, fine is 5 lakhs to 25 lakhs. People always remember penalty is less serious than fine. Fine is more serious than penalty. Okay. Debtor or the borrower shall be imprisoned up to 6 months or fine 5 to 25 lakhs or both. Okay. Penalty applies only to the company, defaulting director and person receiving the loan, not to others indirectly involved. Okay. Now exemption to certain private companies. So private companies can give loan to the directors, provided three conditions are satisfied. Number one, section 185 does not apply to a private company if three conditions should be satisfied. Number one, no other body corporate has invested in a share capital, which means what? Let's take an example of Bright Line Foods Private Limited. In that, there are only individual shareholders, there are no company shareholders, then that's allowed. Next is borrowings from banks, financial institution, body corporates are less than twice its paid out share capital or 50 CR, whichever is lower. What is the meaning of this, people? Let's say the body corporates paid out share capital is 10 CR and the borrowing is 15 CR. Now what we have to do is we have to multiply the paid out capital by 2 times, and that is 20 CR. Now if you multiply the paid out capital by 2 times, is the borrowing less than twice the paid out capital? If the answer is yes, you are covered under the exemption. Yes or no, people? And the last is the company has no loan repayment default. That means private company should not have defaulted in the payment of loan. Then only they will be categorized under exemption. So 3 exemptions should be there. Number 1 is no other body corporate should be a shareholder. Number 1. Number 2, the borrowing amount is less than twice the paid up capital or 50 CR, whichever is lower. And last, there should not be any loan repayment default. Yes or no, people? Okay. Now let's understand this using mind maps. Yes. People, this is the mind map. Okay, let's quickly read this. No company shall give directly or indirectly loan, guarantee, or security to directors of the company or such firms in which such director or relative is a partner. Now, director of the holding company, director of the company, or the relatives or their partners, company cannot give any loan. Strict prohibition. Okay. Now, there is an exception to this case. Loan, we are now giving loan to not directors, we are giving loan to interested person. A company can give loan, a company can give guarantee, a company can give security to persons in whom directors interest. Now, who are these persons? Number 1 is, people, who are these persons? Where is this? Yes. Who are these persons? Person means private company in which that director is a director or a member of the private company. Number 2 is where the director holds more than 25% voting power in that body corporate. Number 3 is any body corporate whose board of directors are accustomed to act as per the instructions of these directors. That means it is called as persons to whom director is interested. Okay. So some company can give loan to directors, persons in whom director is interested. What are the conditions, people? 2 conditions. Number 1 is special resolution must be passed, and number 2 is the loan must be used for principal business purpose. Very easy. Now, what are the exemptions? Section 185 does not apply in 2 cases. Number 1 is if loan is given to MD or whole-time director, other directors are not covered. So, as part of service condition to all the employees or by a scheme approved by special resolution. Very easy. And if I am giving loan, guarantee or security under ordinary course of business, my job is itself giving loans and guarantee and security. It is completely allowed, provided the interest rate should be more than or equal to prevailing government securities. Okay. Now next, if a guarantee or security is provided by a holding company to its subsidiary company, in that case, it is completely allowed, provided it is using for its principal business activity. Okay. And if holding company is giving loan guarantee security to its wholly owned subsidiary company for its principal business purpose, it is also allowed. That's people, if you contravene the provisions, fine will be 5 lakhs to 25 lakhs, and every officer in default will be imprisonment for a period not more than 6 months, or fine will be 5 lakhs to 25 lakhs. Okay. People, it was extremely easy, people. Yes or no? Yes or no, people? Chalo. So we are done with loan to directors. We are also done with loan to interested person. Perfect. Now let's come to section 186. Section 186. Okay. So, loan and investment by a company. It is not loan to directors. Yes or no? Now who is giving loan? Company is giving loan. What is the limit that will be applicable to the company? Okay. So, how many parts are there? Number 1 is power to invest. Number 2 is limitation on investment layers. Number 3 is restriction on loans, investment guarantee security. Number 4 is approval requirement. Number 5 is disclosure in financial statement. Next is board and PFI approval, inter-corporate loan and deposit, rate of interest, default restriction, register maintenance, exemptions, rule making power, penalties, and that's it. Sir, there is so many topics to study. Don't worry, people. Now, what we are going to do is, we're going to slowly, gradually will learn every single rule and provision. Okay, don't worry. Again, we're going to revise using mind maps. Okay, people. Chalo. So companies like individuals often have extra funds which they can invest or which they can lend. However, the Companies Act 2013 put certain restrictions to ensure these activities are done responsibly. Okay, so whenever you are investing into another company, you should do it responsibly. Now, what is the meaning of responsibly? We are going to study the provisions. Yes or no, people? Chalo. Who has the power to invest? The board of directors has the power to invest companies' funds under section 179. 179 talks about powers of board of directors. Okay, but this power is restricted by section 186, which governs loans given, investment made, guarantees given, securities provided. So you can give loan under the power given under Companies Act, which section? Section 179. But there is a restriction, and in this restriction is given in which section? 186, which is what we are going to study right now. Yes or no, people? Chalo. Even giving a guarantee of security is treated like giving a loan, because a company might have to pay the amount if the borrower defaults. We all know this, people. So we are talking about loan, investment, guarantee, security. Okay. Now, people, what is the first restriction? A company can invest only through a maximum 2 layers of investment company. What is the meaning of this, sir? A can invest in B, B can invest in C, C cannot invest in D. So maximum 2 layers are allowed. Okay. Now, what are the exceptions to this rule? So rule number 1 says you cannot have more than 2 layers of investment. Yes or no? Yes. So what are the exception? Exception means what? You can have more than 2 layers of investment. What are those exceptions? Let's understand. If the company buys another company which is not in India but which is outside India, that has already have more than 2 investment layers as per that country's law. Which means what? If Tata Steel is acquiring Chorus, which is based in UK, and that Chorus has 3-4 layers of subsidiary company, is it Tata's fault? No. So Tata can acquire Chorus, and Chorus can have more than 3 to 4 layers of subsidiary company if UK law allows it. Yes or no, people? Yes. Next is, if a subsidiary needs another layer to meet legal or regulatory requirements, which means what? Indian law requires you to have subsidiary company so that your risk will be divided. If law is requiring you, then you can be allowed to have more than 2 layers of subsidiary company. Very easy. So rule number 1 says you cannot have more than 2 layers of subsidiary company. Exception is number 1, the outside country law has already got more than 2 layers and you are acquiring that foreign company, it is allowed. Number 2 is the law in India itself requires you to have more than 2 layers of subsidiary company. Very easy, people. So number 1 is limitation on investment layers. Perfect. Now, what are the restrictions on loans, investment, guarantees or security? People, very easy. A company cannot directly or indirectly give a loan to any person, be it directors, be it company, any person or a body corporate. Company cannot give a guarantee or a security in connection with a loan to any person or body corporate. So basically you cannot give loan, you cannot give guarantee, you cannot give security. You cannot acquire securities of any other company beyond certain limits unless approved by a special resolution. So till here we will understand. Number 1 is a company cannot directly or indirectly do 3 things. Number 1, a company cannot give loan to any person or any body corporate. Number 1 is simple. Number 2 is a company cannot give guarantee, a company cannot give security. Okay. Number 3 is a company cannot even acquire securities or any securities of any company beyond a certain limit. If you want to acquire securities beyond a certain limit, you will require shareholders approval. Very easy, people. Now, what is the limit? Continuously we are talking about limit. What is the limit? The limit is 60% of paid up share capital plus free reserves plus securities premium. So 60% of paid up capital, free reserves, securities premium, or 100% of free reserves and securities premium. So higher, you have to pick the higher. So what is the limit, people? Quickly tell me. 60% of paid up capital, free reserves, securities premium, or 100% of free reserves and securities premium, whichever is higher is the limit. If you want to give loan, if you want to acquire securities, if you want to give guarantee, if you want to provide security in connection to any loan, you can beyond the limit provided you have a special resolution. Otherwise, you cannot do without special resolution. If you want to do without special resolution, you should make sure that the whatever you are giving is within the limit. Yes or no? What is the limit? Quickly tell me, people. Number 1 is 60% of paid up share capital, free reserves, securities premium, or 100% of free reserves or securities premium, whichever is higher. Yes or no, people? Perfect. Now there is an exemption to this. No special resolution is required if the investment or loan is given to a wholly owned subsidiary or joint venture. So no special resolution is required in this case. So you can give loan beyond the limits also. If you are giving it to whom? Wholly owned subsidiary company or JV. JV means what? Joint venture. Okay. People, just 1 second. We'll just adjust my position. Yes. Chalo, people. Now approval requirement. So if you exceed the limit, you have to take shareholders approval via special resolution in general meeting. Okay. Now what are additional things you have to comply? You have to disclose in financial statements all the details of the loan. You have to disclose all the investment details, guarantee or securities given, and the purpose for which you have given the loan. You have to mention every single thing in financial statement so that shareholders will know that what are you doing with the company's funds. Yes or no? Perfect. Number 6. Such transactions, which transaction? If you're giving loan, if you're giving security, if you're investing, if you're acquiring securities, such transactions require approval at a board meeting with unanimous consent of all the directors present. Even if one director says no, you cannot proceed forward. So it requires unanimous approval of the board members, first of all. If the company has a term loan from public financial institution, prior approval is required. So what does this rule says? If you already have a term loan pending, whose repayment is pending, obviously, you cannot give loan, you cannot give security, you cannot give investment more than that limit without taking the approval of PFI. You have to take approval of PFI, then only you can give beyond the limits. Yes or no, people? What is the meaning of PFI? Public financial institution. These are big banks who have got lots of money, and from them I have taken already my loan. Repayment is already pending, so I cannot give money to any person more than the limit that we have spoken about. What is the limit? Quickly tell me again, people. 60% of paid share capital, free reserves, securities premium, or 100% of free reserves or securities premium, whichever is higher. Very easy, people. Now, people, PFI approval is not required in two cases. What are those two cases, people? Number one is within the limit, obviously, and number two is there is no default in repaying that PFI's loan or interest. So, I've already told you, if company is giving loan to any person and their already loan is pending, term loan is pending with PFI, you have to take PFI's approval. Under two situations, you will not require PFI's approval. Which are those two situations? Number one is loan is within the limit. Obviously, for 10 rupees, if you're giving loan of a very small amount, why would you require the permission of the PFI? So, loan should be within the limit. And number two is, people, that should not be default in the repayment of loan to the PFI. Very easy, people. Okay. Now, intercorporate loan deposit. What is this? Companies registered under SEBI Act 1992 and falling under the prescribed classes cannot take intercorporate loan or deposits beyond prescribed limits. So, if you are regulated by SEBI, you cannot take loan beyond a prescribed limit. Prescribed limit is mentioned in the company also, and SEBI also says that if you are registered under SEBI Act 1992, you cannot take intercorporate loan or deposit. Understood, people? Because if you are listed company, money belongs to the public. If something happens, who will be the loser? Public will be the loser. So we don't want to take any risk. So no matter what you do, you cannot take loan beyond a certain limit. Okay. They must disclose the details in their financial statements. We already know this. Now, rate of interest. Loans must be given at a rate of interest not lower than the government security. We already know this, people. And then default restriction. If a company has defaulted in repayment of any deposit or interest, it cannot give loan, it cannot give guarantee, it cannot give securities, it cannot make acquisitions until the default is cleared. That means what? If you have defaulted in repayment of any deposits or interest, you cannot give loan, guarantee, security, make acquisitions until the default is cleared. Until the default is cleared. Very easy, people. Chalo. Next one are very easy. You have to maintain a register of all the details. Loans given must be mentioned, guarantees must be mentioned, securities must be mentioned, investment made should also be mentioned. The register should be kept at the registered office and be open for inspection by the members. Members can take extracts and copies of whatever details they require. Very easy, people. This is very easy. Okay. Now, next, exemptions. Whatever rules we have studied till now, these rules will not apply to which category of companies? These restrictions do not apply to two people. Loan, guarantee or securities given in the ordinary course of business. Your business itself giving loans, guarantee, security by banking company, insurance company, housing finance company, companies financing infrastructure or industrial projects. The main job is itself giving loan. Yes or no, people? Company financing industrial infrastructure projects. Do you remember, people? Diwan Housing Finance Limited, when we were studying CRP. Yes or no, people? If Diwan Housing Finance Limited is providing finance to the home buyers, providing finance to the development, to the builders. So for them, these limit will not be applicable. Yes or no, people? Then investment made by investment company subscribing to right issue. What is the meaning of investment company? Zerodha is an investment company. Okay. Company subscribing to right issue. That means what? I am already a shareholder of a company and that company is issuing new shares. I am purchasing those shares at a discounted price. It will not be categorized under investment. Okay. Next is NBFC, non-banking financial company. And next is companies whose main business itself acquiring security. And last is shares allotted under section 62(1)(a) that talks about right issue. Okay. Now, central government can make rules. Penalty is fine between 25k to 25 lakh every defaulting officer, imprisoned up to 2 years, and fine between 25,000 to 1 lakh. That means you can imagine how serious this offense is, because over here and word is used, not or, and word is used. Yes or no, people? So now, people, we are going to revise every single thing using mind maps. Yes, this is a mind map. Once you read this, people, you will be thorough with section 186. This is my promise. This is my promise. Once you study using mind maps, every single thing will be so much clear to you that there's no need to even read my notes. Okay, my mind map is itself sufficient for revision purpose. Okay, chalo. People, don't be afraid of the mind map. Okay, I will tell you how to read my mind map. Always begin with this one. A company cannot give loan. A company cannot give any loan to any person or body corporate. A company cannot give any guarantee or security. A company cannot even invest or buy securities in another company beyond a certain limit. What is that limit? 60% of paid share capital, free reserves and securities premium, or 100% of free reserves and securities premium, whichever is higher. That means what? Company cannot give loan, company cannot invest, company cannot acquire, company cannot give any security beyond a certain limit. What is that limit? 60% of paid capital, free reserves, securities premium, or 100% of free reserves and securities premium. Okay. Next, if you want to exceed the limit, you have to take special resolution general meeting. Now, this is not applicable to loan and guarantee provided to wholly owned subsidiary company or joint venture, and investment is made in wholly owned subsidiary company. So these limits will not be applicable over these cases. Yes or no, people? Okay. Next, you have to disclose in the financial statements of all the loans, investment, guarantee given, securities given, and you have to mention the purpose for which the loan, guarantee, security or acquisition is made in your financial statements. So number one, we understood company cannot give beyond a certain limit. What is that limit? Also, we understood if a company wants to exceed that limit, it will require SR. Now, SR is not required in two cases. Also, we understood. Now, whatever the company is doing, it has to disclose in the financial statements. Very easy. Okay. Next, company cannot have more than 2 layers of subsidiary company. What are the exceptions? Number one is if a company is acquiring a foreign company and that foreign company has already got more than 2 layers, it is completely allowed. And number two is law requires me to have more than 2 layers of subsidiary company. Okay. Next is interest rate condition. A company cannot give loan at an interest rate lower than that of a prevailing government securities. Yes or no? For example, if 3-year government yield is 7%, ABC cannot lend more than 5%. Okay. Yes. ABC can lend money at 5%. They cannot cross 7%. Okay. People, once again, I think I have slipped my tongue. What is this? If 3-year government yield is 7%, ABC cannot give any loan, security, guarantee or acquisition at an interest rate lower than 7%. Okay. That means you cannot give any favor. Yes or no, people? Okay, and the penalty is company will be penalized 25,000 to 5 lakhs and officer in default will be imprisoned for less than 2 years plus fine between 25,000 to 1 lakh. Okay. If company has defaulted in repayment of deposits or interest, company cannot give loan guarantee security until the default is cleared. Okay. Now next, whose approval will you require whenever you give loan guarantee security? Number one is, first of all, board of directors should unanimously pass in the board meetings resolution. What is the meaning of unanimous? 100% consent should be given. Yes or no? And number two is, if company has got a term loan pending in PFI, they have to take approval of public financial institution, and the exception is to exception. If it is within the limit, plus there is no default. Yes or no, people? And then last is you have to maintain a register where you have the details of loans given, guarantee security provided, investment made, and it should be kept at registered office, open for inspection, and copies can be extracted by the shareholders. Now, section 186 does not apply to which companies? Banking company, insurance company, housing finance company, company engaged in financing or infrastructure, plus they should be acting in their ordinary course of business. Next is NBFC, lending or investment activities. For such type of companies, 186 section does not apply. Then company's main business itself, acquiring securities, then shares allotted in right issue, NBFC financing, industrial enterprises, and then people, all these are exceptions. Government companies which is into defense production or any other similar activities where details need not be mentioned because we need to maintain privacy. Okay, people. So basically section 186 controls how much a company can give as loan, guarantee, security or investment to other company or persons to avoid misuse of shareholders' funds, avoid excessive financial risk by lending or investing freely. So we have understood the limit, every single thing, we are done, people. Yes or no, people? Yes or no? Chalo. Okay. People have also given you a summary table of the entire section. See over here, summary section. Every single thing is given to you. Okay, people? Chalo. Now next, we are done with loan to directors. We are done with loan and investment by company. Now let's talk about section 187 that talks about investment by company to be held in its own name. Very easy, simple section. Chalo. So how many parts are there? 1, 2, 3, 4. 4 parts. Very easy. What is this section all about? Let's read this. This section ensures that a company's investment are transparent and traceable. It should be a case where if I am acquiring securities, I should acquire in my own name. I should not be acquiring in another person's name. It will be a case like Dawood Ibrahim is funding the production of Bollywood movies and nobody knew that actually this money belongs to Dawood Ibrahim. This should not be a case. For that purpose only, this section has been made. Whatever you're doing, you should do in your own name. Yes or no, people? Chalo. Basically, any property, any shares, any securities owned by the company must be held in the company's own name, not in someone else's name, except in permitted situations. Now, basic rule says that whatever you're doing, you should do in your own name, except certain situations. We will understand what are those certain situations. General rule. Investment must be made in the company's own name. We know this. Company must hold all its investments, property, securities or other assets in its own name. This rule is to prevent misuse or fraud so that the ownership of the company's assets remains clear. Now, what are the exceptions? nominee shareholding for subsidiary. Now this section doesn't apply to this situation. Apart from this, there are 4 more situations we'll understand. Sometimes a holding company needs to hold shares in a subsidiary company in another person's name. This is allowed only to meet the legal minimum number of members required by law. People, you all tell me how many minimum members are required in private company. Tell me. There are 2 members minimum required to form a private company. Yes or no? Now, if a company wants to have a subsidiary company, if I am the ultimate holding company and I want to incorporate my wholly owned subsidiary company, then I am the only shareholder, right? But does the law allow me to be the only shareholder in a company? No. Law says that you should have minimum 2 members. But every single thing belongs to me. I am investing in the company. Why would I include another person? For that purpose, people, law is saying that you can have a nominee to be the second shareholder, but that nominee will not have any power. That nominee will be acting as per my instructions only. Okay, for the namesake, he is the shareholder. Otherwise, he is not the shareholder. Let's understand this using an example. ABC owns 100% of XYZ Private Limited. A private company must have at least 2 members. ABC Limited can't hold all the shares in its own name because private company says you should have at least 2 members. So ABC can nominate one person to hold 1 share, only 1 share on its behalf, just to meet the legal requirement of 2 members. So that is allowed completely. So that means what? You can have investment in that nominee person's name in that wholly owned subsidiary company. Very easy, people. Okay. Next is other permitted exceptions. So the law allows company to temporarily or conditionally hold investment in someone else's name. Sir, just now we have studied you cannot have that. There are certain situations. Now let's understand what are those certain situations. Deposit with a bank for collection. The company can deposit shares or securities with a bank to collect investment or interest on them. What we are going to do now is, we are going to look at the mind map. So basically, people, I will tell you. Deposit with the bank for collection. People, now I want to collect dividend. I am a shareholder of Reliance. I am company called as Myntra. So Myntra is a shareholder of Reliance. Reliance has paid dividend. Now I want to appoint a bank to collect the dividend from Reliance. For that purpose, I have instructed HDFC Bank that you collect interest, you collect dividend on my behalf from Reliance. That is completely allowed. The company can deposit shares. I am depositing my shares with HDFC Bank to collect dividends or interest on behalf of me. Yes or no, people? Very easy. So number 1 is deposit with the bank for collection. In these, now we are talking about what are those situations in which company can have investments not in their own name. Number 1 is deposit with the bank for collection of dividend or interest. Number 2 is, people, deposit or transfer to bank to facilitate transfer. Now people, A and B have agreed. A has agreed. Let's take an example of HUL and GSK itself. Okay, HUL and GSK. So HUL is going to acquire GSK shares. Now, during this agreement, they have arrived at a condition that HUL has to deposit money in a bank and GSK has to deposit shares in a bank. Once both the parties fulfill their obligations, money will reach GSK, shares will reach HUL. For that purpose, for facilitating the transfer, I am transferring my securities. That is completely allowed. So number 1 is deposit with a bank for collection of interest or dividend, and number 2 is deposit or transfer to a bank to facilitate the transfer. Okay. Next is pledge or security for a loan. I have taken a loan. Now in return, I have given my securities as a pledge, as a mortgage. Tomorrow, if I do not repay, bank can sell these securities. So temporarily bank is holding securities in their name. Number 4 is, okay, let's read this out. The company can deposit or transfer shares or securities to any person as security for a loan it has taken. And the last is people holding in the name of a depository. So people, let me tell you, there's a concept called as depository. NSDL, CDSL, we all have studied in SEBI regulation, people. That's the reason why I have finished SEBI regulations before Companies Act. So, do you remember, people, company when it's going for an IPO, company has to get into an agreement with the depository. What is the purpose? So that company can completely deal in electronic shares. Yes or no, people? Now, there are two depositories, NSDL and CDSL. If I am a shareholder of Reliance, actually in Reliance books of accounts, in Reliance register of members, my name will not come. NSDL or CDSL name will come. My name will come in these depositories record. I will again tell you. My name will not come in the register of members of Reliance. No. In the register of members of Reliance, there is only NSDL, CDSL. Okay. But NSDL, CDSL books of accounts, my name is there. The reason is I am the beneficial owner. Actually, the dividend rights are enjoyed by me. But on paper, who is the shareholder? Depositor the shareholder in the Reliance. So, just get this one thing very easy, people. In the register of members of Reliance, NSDL, CDSL are the members. Sir, are they going to get dividend? Are they going to get voting rights? No, they are simply member on paper. Actually, I am the actual owner. I am the actual beneficial owner. So how will you come to know? I will come to know when you check the depositories register of members. That is called as beneficial owner. Now let's read this again. If the company's investment are in demat form, they can be held in the name of the depository, since the company is recorded as the beneficial owner. Yes or no, people? People, remember I have told you, bank, the depository, bank will have digital lockers, demat account. Yes or no, people? Okay, now I can explain you in a better way possible. Bank is the depository. If you remember my SEBI regulation, and bank contains digital locker, that is demat account. Yes or no, people? So all the demat account belongs to the depository. That's the reason why, people, in the register of members of Reliance, the name is NSDL or CDSL. But actually, whatever shares are in the demat account, does this belong to the depository again? No, it belongs to me. Same logic, people, same logic. Okay. So 4 things we have understood. Deposit with a bank for collection. Number 2 is transfer or deposit shares to facilitate the transfer, deposit or transfer to facilitate transfer. Number 3 is pledge or security for loan. And 4th is holding in the name of depository. Very easy, people. And last is register of investment not held in company's own name. Okay, let's look at it. If a company holds any shares or securities not in its own name, if it is falling under these exceptions, it must maintain and register with all the relevant details of such investments. The register must be kept open for inspection by any member without any charge. It could be inspected. Very easy, people. So now let's again read this using mind maps. Yes. So what does the section says? Investment should be held in the company's own name. No doubt in that. Company must hold all its investment in its own name. Any property, shares, securities, investments, every single thing should be held in the company's own name. Purpose is to ensure transparency and prevent misuse. Okay. Now next. Exception is company may hold securities in a subsidiary company in the name of the nominee. It is allowed. It is exemption. Only if there's a condition, only if required to maintain the legal requirement. What is legal requirement? Minimum 2 members should be there in private company. Okay. Now next. What are the permitted exceptions? Number one is if you're depositing shares, if you're depositing securities to the banks for collecting dividend or interest, it is completely allowed. ABC Limited deposits with the HDFC Bank to collect interest, it is completely allowed. Number two is transfer or hold shares or securities in the name of scheduled bank to make future transfer easier. And next is if you deposit or transfer shares or securities as collateral security for a new loan or obligation, it is completely allowed. And last is in the name of depository when shares are held in demat form, that's completely allowed. Okay. Company has to maintain the register of investment if it is not holding shares in their own name. Okay. Maintain and register, particulars of investment should be mentioned. Keep it open for inspection. And last is you can impose reasonable restrictions to people. This is not important. Okay. This is not important. What this says is that if you want to restrict that timing hours for inspection, you can do it provided you pass a special resolution, a general meeting, or you mention this in the AOA itself. Very easy. Inspection should be free of charge. Okay. So people, so we can say now 187 is also done. 187 is also done, people. Chalo. Now people, now we're going to talk about acceptance of deposit. Beautiful section. Okay. I know most of the CMA final law students are afraid of the section. Sir, we are not able to understand anything. Don't worry people. Once you are done with this lecture, I am 100% sure you try to solve any problem with respect to 186, 187, 185 or 73 or 72 6A. I'm sure that you will be able to solve any question. You will be able to tackle any question in the most beautifully possible, effortlessly. You'll be able to tackle. Okay. Chalo people. Let's start. Hello. Chalo. Next is people, acceptance of deposit. What is the meaning of this, sir? People, let's read this. A deposit means any money received by a company as a loan or deposit or in any other form, but excludes specific categories of money as prescribed by the RBI. So people, every money that company receives, any money that the company receives is potentially called as a deposit. If a company receives any money, it is called as deposit. It is called as deposit. Now people, there are exceptions when a money will not be called as deposit. First, we'll understand what is the meaning of deposit. We'll understand what will not be included in deposits, and then we'll try to read the rules. Okay, people. So number one is company, any money that the company receives, it will be called as a deposit. Yes or no? Yes. Now, which type of money will not be called as deposits? Number one is the company has received share application money where allotment is still not made. And certain time limit, allowed time limit has been passed and still you have not allotted the share. That means what? That is free money with you. Yes or no? Then that will be called as a deposit. But if you are holding share application money, and allotment is not made and you are following that time limit, then it will not be called as deposit. The moment you cross the time limit, that's a free money, it will be called as a deposit. Very easy. Next is people, if you have received, okay, one second. If you have received advances from customers, which means what? A supplier has supplied you goods. Okay, we'll change the example. Advance received from the customers. That means what, people? You have promised to deliver goods to a person. You have promised to deliver goods to a person and the person has already paid you advance money. Now it's been 1 year, you have not supplied him goods at all. That means what? That money is again a free money. It will be considered as deposit. It will be considered as deposit. Deposit is prohibited. Basically, I will tell you. We will understand exemptions and all. So basically, two exceptions we understood, which will not be categorized under deposit. If you have received share application money, allotment is pending, but you are following the time limit, that money will not be called as deposit. If you have promised to supply goods to a customer and the customer has paid you advance, it's been 1 year, you have not paid, it will be called as deposit. If 1 year has not passed, it will not be called as a deposit. Next is loan from directors. If if the company has taken a loan from the director, it will not be called as a deposit. Next is people, this is important. Okay, the company has taken a loan from a director, it will not be called as a deposit. But if the director has borrowed money from somewhere else and then the director has given to the company, then that money will be called as a deposit. If it is director's own funds, it will not be called as a deposit. But if the director has borrowed fund from a bank, then it will be called as a deposit. Now people, shareholders have given loan to the company. Shareholders have given loan to the company. If it's a private company, it is allowed within a certain limit. If it's a public company, it will be called as a deposit if conditions are not followed. We are going to understand this. Simple. If a shareholder has given loan to the company, it will be, and the loan and every single thing is within the limits, it will not be called as a deposit. If public company has received loan from a shareholder, it will not be called as a deposit provided they have followed the certain conditions. Very easy. Sure. Now let's read this again. A deposit means any money received by a company as a loan or deposit or in any other form, but excludes specific categories of money as prescribed by RBI, like share application money, advances, etc. Okay. Now let's come to the beautiful heart of the section. Acceptance of deposit, section 73 to 76. How many parts are there? 73. A, B, C, D, E, F, G, H, I, J, K. People, don't be scared. L. Yes. Let's quickly read this. Prohibition on acceptance on deposit. Now, by the name itself says you cannot accept deposit. Now, let's understand, go in detail. No company can accept deposit from the public except as allowed in this chapter. You are prohibited from accepting deposits, but if you follow the conditions, you can accept. Okay. Banking companies and NBFCs are exempt. The reason is, it is their main job itself receiving deposits. The main job is itself receiving deposits. Okay. People, let's read the first point again. No company can accept the deposit from the public, which means what? Let's read the first line. Company cannot advertise in the newspaper that we want to raise this much amount of money, we will give you exorbitant interest rate. So you cannot lure the public. Okay. But there are exceptions to it. A company may accept deposits from its members. Members are different, public is different. Okay. Members are shareholder, public is not shareholders. Okay. A company may accept deposits from its members if it passes a resolution at general meeting. If shareholders are giving you approval, you can accept deposits from the members, not public. Okay. You issue a circular to your members stating their financial position, credit rating, number of depositors, and amount due from previous deposit. Which means what? If you want to take deposits from your members, you are allowed to take, provided you take the approval of your member. You take approval of your member, and one more condition is you have to give a circular. You have to give a circular. That circular should mention. Example is company's net worth is 15 CR, company's CRISIL rating is A grade, and depositors are till now 220 number of depositors, and last is all deposits are still pending, so that members, when they give approval, they will have certain background of the company. Yes or no, people? Okay. Company must file the circular with the registrar within 30 days before the issue. So the moment you file the circular with the registrar 30 days before filing the circular. So if you are filing a circular 30 days before filing the circular, you have to file it with the ROC. If the circular is dated 1 June, you have to file the circular to the ROC by 2nd May. Okay, people? ROC is Register of Companies, should know every single thing what you are doing. Okay? Chalo. Next is, company must maintain a deposit repayment reserve, at least 20% of deposits maturing during the year, kept in a separate bank account before 30th April. First of all, you can accept deposits from your members. You have to take shareholders' approval. You have to file a circular. You have to file with the ROC. Okay. Next is, now that you are taking deposit, now that you are accepting deposits, you have to also now maintain a deposit repayment reserve. Okay, because members are expecting return, right, people? Members are expecting repayment, and to make sure that you have enough money for the repayment, this provision has been made. Example I will tell you. Let's say this year is 24-25. Okay, next year 50 lakhs worth of deposit is going to be matured, which means what? 50 lakh rupees I have to repay back to the depositors. 25-26. Now 50 lakh worth of deposits is maturing in the year 25-26. This year, current year is 24-25. Just an example I am giving you. 20% of the deposits maturing next year, that is 20% of 50 lakh, that is 10 lakh, should be deposited in the deposit repayment reserve. By which date? By 30th April. By 30th April 2025. Let's read this again. Maintains a deposit repayment reserve, at least 20% of deposits maturing during the year, kept in a separate bank account before 30th April. So if the year is 25-26 and I know that this year 50 lakh worth of deposits are going to be matured, by 30th April of this year itself, I have to transfer all the money in a separate bank account, and that is called as deposit repayment reserve. Very easy. So rule says that if during the current year 50 lakh worth of deposits is going to be matured, I have to pay 50 lakh worth of deposit to my members. I have to make sure that 20% of the amount maturing should be deposited in a separate account called as deposit repayment reserve by 30th April of that year. Very easy, people. Next, certifies it has no default in the repayment or interest payment. If the company has failed to repay deposit 2 years back, in that case, company cannot proceed forward. It certifies that it has no default in the repayment or interest payment. If you are defaulting and you are accepting deposits, doesn't make sense. No. Next is provide securities. If unsecured, must be clearly mentioned in the circular or ads. Which means what? When you are taking deposits from your members, you give them a circular that XYZ amount we want to take from you and will give you interest rate XYZ. Okay. Now when you are taking the money, you have to mention every single thing to the shareholders. Example is the deposit that we are accepting, it is without any charge credit. There is no secured asset in place. So tomorrow, if I default, you will not have any assets to recover my money. I have to mention only if it is unsecured. Yes or no, people? So if unsecured, it must be clearly mentioned. Every single thing should be clearly mentioned to the shareholders whenever I am taking money from them. Logic is simple. Next, all deposits must be repaid with interest as per agreed terms. We all know this. Default remedy. Depositors can approach to NCLT for repayment. If I default, deposit reserve account can be used only for one purpose. What is that one purpose? For repayment of deposit. I cannot use that money to pay suppliers, bills and salaries to my employees. No, it should be only used for one purpose, that is repayment of deposits. Okay, very easy, people. Now next, what are the terms and conditions for accepting deposits? People, tenure, limit on deposits, eligible company. Now that I am accepting deposits from my members, what should be the tenure between which I have to repay? Let's understand. Tenure should be minimum 6 months. That means what? I cannot accept deposits for a period less than 6 months. Maximum 36 months. I cannot accept deposits for a period more than 36 months. So between 6 months to 36 months, I have to repay the deposits back to my members. Okay. Exception is up to 10% of capital plus free reserves may be accepted for minimum 3 months. What is the meaning of this, people? Let's understand this using this. That means what? I can accept deposits for a period less than 6 months, but provided the maximum amount I can raise is 10% of capital or free reserve, not more than that. That means what, people? Whenever I need money, I will immediately raise short finance quickly from the members. It is wrong. It is wrong way of handling your money. So tenure, if it's 1 year, it's allowed, no problem. If it is 4 months, it is not allowed, but there's an exception to it. In case your tenure is 4 months, you have to ensure that it is 10% of paid up capital and free reserves. So example is, paid up capital is 50 CR, free reserves is 10 CR, securities premium is 5 CR, total is 65 CR. Maximum how much money I can raise if the period is less than 6 months, it is 10% of 65 CR, that is 6.5 CR. Very easy. So I cannot take deposits for a period more than 6 months. I cannot take deposits for a period more than 36 months. Okay. Not less than 6 months, not more than 36 months. Exception is, I cannot raise more than 10% of my paid up capital, free reserves and securities premium. Very easy, people. Now, what is the limit of deposits? What is the maximum amount of deposits I can raise? If it is from the members, I can raise 35% of capital, reserves and premium. Maximum from the members, how much I can raise? 35% of capital, reserves and premium. If it is an eligible public company, I can raise maximum 10% from my members, or I can raise maximum 25% from the public. Sir, just now you have told that company cannot accept deposits from the public. People, general rule is that company cannot accept deposits from the public, but certain companies can accept. General rule, it is not allowed. Exception, it is allowed. Only for whom? Eligible public companies. Okay. Now, what is the meaning of eligible public company? Public company with a net worth of more than 100 CR and turnover of more than 500 CR. That means what? Any public company who has got a turnover of at least 500 CR, paid a capital of at least 100 CR, it can be called as an eligible public company. For them, what is the limit? If it is members, it is 10%. If it is public, it is 25%. Very easy. Now, if I am accepting money from the public, I must ensure that I get shareholders' approval via special resolution and credit rating. Okay. Now, example, what is the meaning of eligible company? Let's say Reliance Limited. Its net worth is 12 lakh crores, such a huge amount. Its turnover is 8 lakh crores, huge amount. It is called as an eligible public company. ABC Limited. Its net worth is 40 CR. Its turnover is 120 CR. It's not an eligible public company. Yes or no, people? So maximum they can raise is 35% from its members. I have told you, people, if it's eligible public company, maximum 10%, 25%. If it is not an eligible public company, the limit again stays 35%. Yes, 35%. Okay. Now, joint deposits. Up to 3 names allowed, which means what 3 people can jointly give deposit to the public. Maximum, not more than 3 members. Example is Rajesh, Kumar, Priya can jointly give deposits, but Aditya cannot be added. 4 members, not allowed. Maximum 3 members. Okay. Interest and brokerage cannot exceed RBI's prescribed limits. So, if a company promises, we will give you exorbitant interest rate, it is not allowed. You are luring the public. Yes or no, people? Perfect. Next is no adverse alteration. Once you have accepted, you cannot change the terms of the deposits to the disadvantage of the depositors. Whatever change you want to do, you can do, but for the advantage of the depositors, not to the disadvantage of the depositors. Example is, if I want to decrease the interest rate, I cannot do that. But if I want to increase the interest rate, I can do that. Alright, people? Chalo. Now that we have spoken, now that we are talking about eligible companies, now what all additional provisions eligible company has to comply with? Let's read this. Eligible companies must create a charge on specific assets, be it movable, immovable, doesn't matter. You have to create a charge for at least amount not covered by deposit insurance. Sir, what is deposit insurance? Tata Motors, if it accepts 100 crore deposit from the public, Tata Motors being an eligible company, if the deposit insurance is 40 CR, which means what, if the company defaults, insurance company will pay them the deposit. Yes or no, people? Now 100 crore deposit I have accepted, only 40 CR I have got insurance, remaining 60 CR I have to create a charge in favor of the deposit trustee. Now, who is deposit trustee? Deposit trustee is a person appointed to protect the interest of the deposit holders. Yes or no, people? Perfect. Now, appointment of trustee or depositors. Let's understand. A company must appoint independent trustees before inviting secured deposit. The moment you invite deposit, you have to make sure that you have already appointed a independent deposit trustee. Trustee cannot be directors, trustee cannot be KMPs, trustee cannot be employees, trustee cannot be depositors, trustees cannot be creditors, trustee cannot be related parties. So no association with the company. A deposit trust deed must be executed 7 days before issuing a circular. Now, before you issue a circular, you have to do 2 things. Number 1, you have to file with the ROC before 30 days, and before 7 days, you have to file DPT 2 that talks about deposit trust deed. That talks about which deposit trustee we have appointed, what is his details, every single thing should be mentioned. Trustee cannot be removed before term ends without board consent, and 1 independent director must be present. Which means what? If you want to remove a trustee, you can, provided you pass a BR, but there should be 1 independent director. Very easy, people. Sure. Next is, what are the duties of trustee? Ensure assets and insurance cover repayment of deposits and interest. Tata Motors 100 CR. I, as a deposit trustee, ensure that insurance and charge are covering 100 CR. Checking accuracy of circular and compliance with the trust deed. Is company following every single thing that they are promising? Ensuring company follows all of them. Take action for breach. Call depositors meeting if required. If the company breaches, the company breaks any provision or any terms mentioned in the deed, as a trustee, I have to call the meetings of all the depositors so that I can apply to NCLT. Protect depositors' interest and address grievances. It is my job to protect the interest of the deposit holders. Meeting of depositors. Trustee must call the meeting under what situation? If there is any default, immediately I have to call the meeting of all the deposit holders. And if 1/10 of the deposit holders are requesting, I have to conduct the meeting of the deposit holders. Company delays repayment of 20 CR. Depositors holding at least 2 crores, that is 10%, they can request a meeting. Very easy, people. Now G, repayment of old deposit. What is the meaning of this, people? Let's see. Company must file statement with the registrar within 3 months showing unpaid deposits and repayments arrangement. Which means what, people? Companies Act is 2013. Now before Companies Act 2013, there was Companies Act 1956. If I have accepted deposits under Companies Act 1956 and the rules are changed as per Companies Act 2013, what all things I have to do? Number one is I have to file a statement with the registrar within 3 months showing all the unpaid deposits and repayment arrangements. Repay within 3 years of commencement of the Companies Act 2013 or expiry of the term, whichever is earlier. Okay. Next is tribunal may allow extra time considering company's financial position. Let's look at it. ABC Limited had 50 lakh deposits in 2011, which was due in 2016. 2011 before Companies Act 2013, which is due in 2016. Companies Act 2013 started. I have to inform ROC by 2014 within 3 months of Companies Act 2013 commencement. Okay, Companies Act 2013 commenced in the year of 2014. Okay, so I have to inform ROC within 3 months. I have to repay by 2016 3 years. Exception is if NCLT says that you can repay after a certain period of time because there were change in rules and regulations which is not in your favor, so you are allowed. So I have to inform ROC by within 3 months of the new act, and I have to repay as per my terms. This term can be increased if NCLT gives me permission. Okay. Default penalty is 1 to 10 CR. It is very, very serious. Officers will be imprisoned up to 7 years plus fine will be 25 lakh to 2 crores. Okay. Now maintenance of liquid assets. Every company accepting deposit must maintain at least 15% of deposits maturing. So just now we have understood, people, that is a different limit. This is a different limit, people. Every company accepting deposits must keep at least 15% of deposits maturing current year and next financial year in a scheduled bank, usable only for repayment. In that, people, we understood that only for the current year maturing deposit, 15% I have to maintain in the deposit repayment reserve. But over here, people, over here, it is current year plus next year. 10 CR deposit maturing in 25-26. This year is 24-25. I have to keep 1.5, that is 15% of in a special bank account only for repayment of the deposits. Okay. People, this is 20%. Okay. Over here, this limit is 20%, and over here it is 15%. This 20% talks about the current year maturing deposit. I have to open a separate bank account called as deposit repayment reserve. I have to deposit my money over here by 30th April. But over here, people, over here, current year as well as next year total, it's 15%. I have to open a special bank account called as only for repayment. Very easy, people. Register of deposit. Company must maintain register with the details like PAN, address, deposit name, amount, date, period, everything. Entry should be made within how many days? Within 7 days of issuing deposit receipt. And register should be preserved for 8 years. Not damages for fraud. If deposits were accepted with intent to defraud, responsible officers are personally liable without any limit for losses, unlimited liability. Next is legal action can be taken by any affected person or a group. Very easy. Next is deposits from the public. If public companies with a net worth of 100 CR and turnover of 500 CR may accept public deposits, we already know what all things they have to do. They have to obtain credit rating, showing that they have got adequate money and safety and renew it every year. Okay, every year they have to take CRISIL rating. Next is must create a charge within how many days of accepting deposits? Within 30 days of accepting deposits, I have to create a charge, and other rules apply. Penalty for violation is if you accept deposit illegally or fail to repay on time, company must be fined at least 1 CR or 2 times the deposit amount, whichever is lower. Officers imprisonment up to 7 years plus fine 25 lakhs to 2 crores. If done knowingly or fraudulently, section 447, that is fraud, will apply. Very easy, people. Yes or no? Yes or no, people? So just 1 second. Chalo, people. Well, over here, see, I have mentioned the mind map. People, this mind map, I'm not able to view it properly. People, in the mind map, I have mentioned every single thing, okay? Let's not again read the mind map. I have mentioned in your notes. So you can purchase my notes. Over here, you will get my mind maps, every single thing, okay? I'm not able to rotate it, people. So sorry, but we are running out of time. Chalo, people. Now let's move on to the next topic, that is types of debentures, classification, meaning and example. Okay. So people, what are types of debentures? Redeemable means what? They have got a fixed period of repayment. So these are debentures issued for a fixed period. For example, 5 years or 10 years, the company must repay the principal amount within the prescribed time. Okay, this is called as redeemable. What is the meaning of redeemable? There is no repayment time. What is the meaning of convertible debentures? Debentures can be converted into equity shares. What is the meaning of non-convertible? Debentures cannot be converted into equity shares. Next is, what is the meaning of optionally convertible debentures? It is convertible into option of the shareholder. If shareholder thinks that I want to convert my debentures into equity, they can convert. It is on the option of the shareholder. Otherwise, it is compulsory. Okay. What is the meaning of fully convertible debentures? The entire debentures I can convert into equity shares. What is the meaning of partly convertible debentures? Only a part of the debenture can be converted into equity shares. Okay. Secured means backed by asset, backed by a charge. Unsecured means they are naked debentures. There are no assets secured. Next is fixed rate dividend. Rate is fixed of the interest. And next is floating rate means rate keeps on changing with respect to the business environment. Next is zero coupon debentures. Means what, people? These debentures don't pay any interest during their lifetime. Instead, they are issued at a deep discount and they are repaid at face value. So you take debentures at discount and you repay them at face value. You take debentures at 97 rupees. You provide them 100 rupees. Very easy, people. I have also mentioned you the example so that you can read, understand, learn in the best possible manner. Okay. Now, people, what we are going to do is we are going to look at the expected question that is going to be asked in your exam. Okay. People, just read this example. Okay. Rakesh Agarwal, non-executive, non-independent director of Happy Travels Limited, unlisted public company, paid a capital of 120 CR, term loan of 65 CR, term loan is pending, was granted a housing loan of 1 CR at a concessional rate. The secretarial auditor objected. Is the auditor's claim correct? Will your answer differ if it was private company? So first of all, always start your answer with the fact of the case. You have to mention Happy Travels is an unlisted public company. The paid up capital is 120 CR. The term loan is 65 CR. Directors were involved was non-executive and non-independent. Then which type of loan did he receive? He received a housing loan of 1 CR at concessional interest rate. The auditor raised an objection. Now the legal question involved is, can a company grant a loan to its director under Companies Act 2013? Number 2 is, would your answer change if it was a private company? Let's understand this, people. Provision prohibits any loan guarantee security to director. You have to mention the provision first. Then you have to write an exception. Exception is, I've told you, MD and whole time director are exempted as part of service or approved by special resolution. Is Rakesh MD or whole time director? No. Loan given in ordinary course of business is an exception. Loan to related person after SR used for business purpose. Is this business purpose? No. Neither is he the MD, neither is he the whole time director, nor it is in the ordinary course of business. Private company, no corporate shareholder, borrowing should be less than 50 CR, no loan default. First of all, tell me, is it a private company? Happy Limited, it's an unlisted public company. So exemption does not have any meaning. Now let's look at the analysis. Rakesh is a non-executive, not covered under any exemption. Neither is he MD nor is he whole time director. The 1 CR concessional loan violates section 185. You are not giving loan to all the directors, all the employees, neither have you passed an SR. Auditor's objection is valid. If it were a private company, exemption would still not apply because the borrowing is 65 CR and it exceeds 50 CR limit. So conclusion is this violates section 185 of the Companies Act. The auditor objection is correct. People, simple, you have to write it down. Simple. Be as concise as possible whenever you are writing answers in your exam. Okay, people? Chalo. Now let's talk about the second question. PQR Limited has convened a board meeting on 25th September 2023 with one of the few items of agenda to approve grant of 125 CR loan to XYZ. People, let's look directly at the fact of the case. PQR has got 7 directors. They held a board meeting on 25th September to grant a loan of 125 CR to XYZ Limited. 186 will be applied. 5 directors attended, 4 has approved, 1 has dissented. I told you we require unanimous board approval. XYZ Limited has already loan from PFI and public deposits. Number 1, if you have got PFI, you have to take public financial institution approval. If 2 things happen, if it is beyond, if there are 2 exceptions to it, you will not require PFI's approval. If it is under the limits, number 1, plus you should not have defaulted in the repayment. Yes or no? And next is you also have public deposits. Now, what is the legal question involved? Is the board valid? Is the board resolution valid under Companies Act 2013? Consider section 186 requirements. Let's read the question again. PQR Limited has convened a board meeting on 25th September 23 with one of the few items is to grant a loan of 125 CR to XYZ Limited. So PQR is going to give 125 CR to XYZ Limited for making a new plant of mug manufacturing with annual capacity of 5 lakh mug. Okay. At the board meeting of PQR, out of 7 directors, only 5 directors were present, and all the present directors except one present recorded his dissent. Means what? Everyone said okay, one person said not okay. Approved a grant of loan of 125 CR to XYZ Limited. XYZ Limited has also taken loans from PFI and deposits from public, which is still outstanding. Examine the validity. Sure, people, let's understand this. Provision. Section 186 talks about 60% of paid up capital free reserves and SP. This limit is not applicable because they have not mentioned you the paid up capital free reserves and SP. But you have to write the provisions. 186.5. Every loan or guarantee must be approved by a unanimous board resolution at a meeting. We already know this. Then if the company has a term loan from PFI, prior approval of that PFI is required before giving such loan also we know. Conclusion is the resolution is invalid because it was neither unanimous nor PFI's approval was taken, and the loan exceeds 186, then SR will be required. Very easy, people. This is how you have to write answers in your exam. First, you have to mention the fact of the case as concise as possible. Then you have to mention the legal question involved. And number 3 is, people, you have to write the provision, then analysis, and then last is conclusion. Okay. Next is question number 3. Sunrise Holdings Limited, an unlisted public company, invested 5 CR in the shares of its wholly owned subsidiary Moonlight Electronics Private Limited. To comply with the requirement of 2 members for a private company, Sunrise Holdings held all their shares except one in its own name, and that one share was held in the name of the director Karan Patel as the nominee shareholder on behalf of the company. Additionally, Sunrise Holding deposited certain government securities with HDFC for collection of interest. Allowed, obviously, people. This is also allowed. This is also allowed. Pledged some debentures with ICICI Bank as security for a business loan. Okay, this is also allowed. The company did not record these investments in a separate register. This is wrong. This is the answer, people. I have mentioned every single thing in your module. Now let's look at the last question. Orion Appliances, a public company, has a paid up capital of 90 CR and a turnover of 450 CR. During financial year 24-25, the company accepted 20 CR from its members after passing an OR, but did not file the circular with the registrar. Wrong. Accepted 30 crores from the public for 2 years, offering an interest rate higher than the RBI limit. Again, over here, wrong. Received 5 CR from director without executing any agreement or filing details. If the director has borrowed money, it's not allowed. The director has not borrowed money, it is allowed. Did not deposit 20% of mature deposits into the deposit repayment reserve and defaulted in repaying 3 crores of mature deposits. The Secretariat Auditor reported these violations. Examine whether the observation is correct with reference to section 73 to 76A. Now you have to mention the fact of the case. Company's name is Orion Appliances, public company. Paid up capital is 90 CR, turnover is 450 CR, not an eligible public company. What is the meaning of eligible public company? Net worth should be 100 CR, turnover should be 500 CR. Accepted deposit from members, public, and a director without following the prescribed procedure. First of all, they are not an eligible public company. They cannot accept deposit from the public. Default in repayment and reserve maintenance. Again, now legal question involved is whether Orion Appliances Limited lawfully accepted deposits from the members, public, and a director under section 73 to 76A of the Companies Act 2020. Let's look at it. Provisions involved. Number 1 is section 73. Only member deposits allowed, not public, subject to approval by resolution, filing of circular, 20% deposit repayment reserve, no existing default. Section 76. Only eligible public companies can accept deposit from the public provided they have 2 things. Credit rating from CRISIL and there is any asset charge. Deposit rules, minimum tenure is 6 months, maximum is 36 months. Interest rate should be less than the RBI limit. Once accepted, terms can't be altered adversely. Section 76A says for illegal acceptance or default, fine will be 1 CR or twice the deposit amount, whichever is lower. Officers will be jailed up to 7 years. Fine will be between 25 lakhs to 2 crores. Now, what is the analysis? 20 crores from members accepted without filing circular and without maintaining deposit reserve violates section 73 subsection 2. $30 crores from public, company not eligible under 76, illegal acceptance of deposits. 3 crores from director. Now this is interesting. Company money from director counts as deposit unless declaration given that it's not borrowed in the personal capacity. Hence, it's a member deposit subject to section 73 compliance, non-compliant. Okay. Next is default and no reserve. Default and no reserve. Failure to maintain 20%, serious contravention attracting 76A penalty, higher interest rate, again a breach of rule. So this should be your answer, people. Conclusion is they have violated section 73, 76, 76A of the Companies Act 2013. Deposits from members, public and other director are illegal due to non-compliance with the mandatory provisions. The Secretary Auditor's objection is fully valid and both the company and its officer will be liable for penalties as per the provisions of the Companies Act 2013. This should be your answer, people. This should be your answer. So, we are done with the subchapter of loans and investment by company. Right, people? I know I have taken a lot of time, but people, the purpose is every single thing should be crystal clear to you. Now, again, if you read using my mind map, I am 100% sure that no matter whatever difficult question can be asked in your exam, you will be easily able to tackle it. Okay? So, people, what we will do is, we will take the dividend. Let's look at the syllabus again. Tomorrow, we will start with the dividend. Tomorrow, we will start with the accounts and audit also. Okay, people? Next lecture. Now, I will just give you a rough idea how will the lectures be conducted. Dividend will be, what I will do is, people, this is done. This I will require an entire lecture. One lecture. Board letters and KMP and board procedures. Again, this will be one lecture. Inspection inquiry, this will be one lecture. So what I will do is, I will take dividends either in a next lecture of 45 minutes maximum, half an hour to 45 minutes, or what I will do is, I will combine this with the 1.1. So 1, 2, 3, 4. 4 more lectures, maximum 5 lectures. In one lecture, I will teach you how to remember sections. And then, people, we are done with the Companies Act 2013. Next 5 lectures, you will be thorough with 70% of your syllabus. That is my goal. Okay? So, let's end our session over here, people. Thank you so much for watching. You have been an amazing audience. If you have got any doubt, please make sure that you contact Inspire Academy. And I will make sure that every single doubt of yours is crystal clear, beautifully answered. Okay? So, take care, people. Eat well, sleep well, study well. Thank you so much for watching. I will see you in the next one.